Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. In my last video I said that we could have a dip in gold and we should prepare for a bottoming out process. And that's happened right now. So gold has done nothing, it's flat for over a month, but this is a consolidation phase. So we're probably done with consolidation and going higher. Let's take a look at the gold forecaster index, which is a leading indicator for gold prices. So we have a bad data point here. So the gold forecaster index has dropped almost in half. So this is not a good data point. And it looks like we are seeing something like in 2011. So here it also dropped downwards. We're not at the zero line yet, so it's still in growing phase, but we need to watch this because if next month this goes back to zero, like here, then something could happen to the gold price. Then we would see a drop in gold. So we are at yellow alert here. This is a pretty big drop. Let's see where this goes. I wouldn't be too worried right now because it's still very high above the zero line. Taylor roll rate is still at above 10%. Misery index still high, so that's good for gold. That's the same. Here we can see a bit of a drop in the gold holdings, so that's a bad sign. LBMA, silver holdings are actually down, so that should be positive for silver. And here it's stable. This is not very good. The China gold demand is lower and also the silver demand is lower. So I want to see this go up again because there's not a lot of demand for precious metals from China. Same with the silver inventory, there's not a lot of demand. But on the COMEX front, we see that registered silver has dropped a lot, so we need to see it bottoming out, and we're not there yet, so there could be more weakness. So this was the bottom in silver, and we want to see this bottom out at some point. US mint sales were good for gold, it's up, but for silver it is not that good. Silver sales are down. On to premiums. So the premiums are pretty high, so that's the only positive that I see in the silver space. High premiums typically are a bottom in silver. So that's looking good. Same with the junk silver premiums. It's pretty elevated. But I would like to see these premiums even higher before I'm getting bullish. Upmex gold premiums also very high. So I don't think gold prices could crash here because we have very high premiums right now. So this is a bottoming out process. PSLV premiums are still not good. Let's take a look. Yeah, they are still very negative. So there is not a lot of interest in silver. On the COT front, it is looking very good short term. So here you see that the net gold swaps are very high, and that means that silver could have a bottom here, and gold as well. And then on to lease rates. This looks very good for gold. Lease rates are high. And for silver, it's not looking good. It's going down again, so probably there are some positive things pulling it higher, but this is pulling it lower. So I don't think silver is going to shoot higher or something. So it will be flat. The Swiss franc went up, so that has pushed gold up a bit. Tips rates are bottoming out, so that could give a bottom in gold. And real yields are falling a bit. Seasonality is looking good for gold. We are now somewhere here. So this should be the ultimate bottom. And then it will only go higher in the next months. Same with silver. We are in free fall here on the seasonality. And you should wait for a bottom here at the end of June. The sentiment in gold miners is very low. So this could be a good buy at this point. Then on to leading indicators. Leading index is actually down, keeps on going down, so growth is slowing down. And Brave Petaskelly leading index is still below 0. So yeah, stock market is not a great place to be right now. We're not in recession yet here, but it's pointing upwards to the recession line. Money supply has been dropping, so we know that money supply is going down, but currency in circulation is still rising. So we are now in deflation mode. So be wary about that. Central bank balance sheets are all flattening out or going down. That's not a good sign. And reverse repos keep on rising. So that means that the bank reserves are declining. So less liquidity. There's less liquidity in the banking system. So that could lead to problems. So watch this space. Then on to capacity utilization. The latest number is good. So capacity utilization is 79% right now. That means that there will be inflation. As you can see here, every time it goes above 80, then you can see a spike in the CPI. And I expect this blue line to keep on rising and CPI to keep on rising as well. So we are not done yet with the inflation. Some numbers on non-farm payrolls. You can see it's flattening out. Employment is also flattening out. It's not improving anymore. Non-farm payrolls are flat. Hires are flat. So we had a very nice bounce last year, but now it's topping out. So yeah, we are almost coming to a recession point here. If this starts to drop, then we are in the recession. Something to watch as well. Now on to the deficits. We actually had a good number on the trade balance. So it improved a bit. You can see here services went up and also the goods trade deficit improved. So we're back on track. Still in a downtrend, but if this can keep on rising, then that's good for the dollar. Here you can already see on the air freights and this inbound price that we are on track to go higher. So deficits are actually improving right now. That's interesting. Import prices down, export prices up. So this gap is now closing. Now, of course, this is not good for gold because the deficit is shrinking. Then let's take a look at the delinquencies. We have a new data point here, the green line. And the credit, revolving credit is increasing. So this gives more and more risk of defaults. Each time that this green line goes up, we see a spike in delinquencies. So that's why I don't think that we should be in the banking sector, in the credit card sector, because delinquencies are going to rise, especially when the Fed funds rate goes higher. And will the Fed increase the interest rates? Yes, because this line here is the 2-year yield, and it's still at 2.5%. So the Fed will probably keep on hiking up until 2%. That's the projection here. Yardeni has decreased his outlook for the S&P. So it was at 5,700, 4,800, and now it's lower. So yeah, stocks are not booming right now. It's a flat stock market. So you need to try to pick the right stocks. It's really difficult to do, but yeah, it's still rising. It's still in a rising trend, but there will be less growth going forward. Let's see how this evolves. Now, one of the interesting charts that I found about gold miners is we have rising costs, as you can see here, but the gold price has not done anything. So what we are seeing is higher energy costs without an increase in the gold price. So that's very bad for the margins, and that's why gold miners and silver miners have not done that well. So it seems that these gold mines are not an inflation hedge at all. And it looks like energy is a better play on inflation. So that's something to think about. Maybe we should go into the energy sector. Now, what did Sprott do? So we have an update in May of the Sprott Inc portfolio. And as you can see here, he sold some of these gold mines. So these are the bad gold mines without a lot of upside. McEwen, very bad. Vista Gold will never get built. Galliano Gold, a lot of costs. So these are all sold. Euro has been sold. I think the euro is in trouble because of the war. He increased some of these holdings, some of the gold mines. And what you also can see here, ExxonMobil is a new holding. So he likes energy stocks and steel stocks, iron ore, also some fertilizer companies like Nutrien. Uranium is still good. That's also uranium. Aluminum, interesting. And he sold off these holdings. Yeah, Gato Silver was one of the worst mines. Fortuna also had some trouble. So we can look at this page if you want. I just found this chart about fertilizers. So here you can see that this is the affordability index of fertilizers. Here, for example, potash was very unaffordable, and you know that this was the top in fertilizers. Now we are also in some kind of a bubble, but this bubble is much lower than this 2008 bubble. So affordability is high, but not like it's really unaffordable. And that's because we have high crop prices. So this is the crop price index, and food is probably going to go higher. That's what I think. And the stock to use ratio is probably going to go lower next year because of all these food problems in Ukraine. I heard that they needed 6 months to demine the Black Sea. So I guess that all that grain in Ukraine is going to be stuck for at least 6 months. So that will probably decrease the stock to use ratio. And as you can see, whenever we have a low stock to use ratio, we have high crop prices. Here it is less so, but here you can see that we have a supportive market, and we today are still in a supportive market. So that means prices of fertilizers can be high. So they will probably stay at a high level as the stock to use ratio goes down and food prices keep on rising. So very important to know, this period is not the same as this period. In this period, we had a pressuring market. That's this red period. But today we are actually in a supportive market for the fertilizers. And that's this blue color. So I think that fertilizers should stay high, and we will monitor what food prices will do. As food prices go up, then it's more affordable to buy fertilizers because you have more revenue due to higher food prices. Very interesting chart. A note on Brazil potash demand. So the main numbers actually came out, and we have around 1,100 imports of potash to Brazil, and about 45% was coming from Russia. So that's very interesting because that means that there are no supply disruptions from Russia to Brazil. And that means that this rise in potash price is not coming from supply disruptions. It's coming from something else, like high food prices. So that's positive. And Russia was 30%, and now it's actually 45% of the imports. Something to keep in mind. Another interesting chart that I found. This is inflation in the x-axis. And here you see the correlation between stocks and bonds. So when inflation is low, you will see a negative correlation between stock and bonds. So if stocks go up, then bonds go down. So money is flowing from bonds to stocks when we have low inflation. But today we are actually at a high inflation period, higher than 3%, okay? And that means that we have a positive correlation now. So if you see bond yields go up, that means that bond prices go down. And then we have a positive correlation, means that stocks will also go down. So yields go up means stocks go down. That's what this means. And if you are looking at the bond market and you see that yields spike, then you can bet that stocks will crash. So that's where we are right now at high inflation. You have a positive correlation between stocks and bonds. Just something to be aware of. These are the warehouse stock levels of aluminum, and they are pretty low right now. So I think aluminum is a very good investment because of the low stock level. So you can look at Alcoa or Rio Tinto for that. It is very important to look at the sector rotation as well. So where are we right now? I think we are somewhere at the market top going into a bear market. That's where I think we are right now. So what do we need to do? We need to get into these commodities, assets, and energy is apparently the winner here, okay? And as we go more into the bear market, and in the late bear market, we will go from energy to utilities and healthcare. So I think we still need to be in energy and then start moving out of this into defensive stocks like utilities and healthcare. So yep, that's why I bought some energy stocks like Frontier Energy. And I can also show you this on this chart. Actually, when you look at this, you can see that the earnings are still rising. So we are actually still in a bull market, but going into a bear market. We are actually still rising a lot. So, but the stock market is apparently topping out. So we are actually going into a bear market and could be bottoming out somewhere here. But what I wanted to show you is the sectors. As you can see here, one of these is booming like crazy, and that's the green line here. All the other sectors are flat or going down, but energy is rising. That's the green line. Same for the small caps. The green line is always the one that's going up faster. Okay, so I think we still need to be in the energy sector. And why is that? Because OPEC Plus is not fulfilling its quotas. So they have consistently failed to produce what they wanted to produce. And in April, it is even worse. And it's probably all coming from Russia, Nigeria. What's this? This is Kazakhstan. Angola. So you can see that production isn't going up well. And that's why energy is rising. You can also see here, OPEC spare production capacity is actually declining. So they cannot increase production that much anymore. Same here, OPEC plus crude exports are declining. So it looks very good for oil. If you can find a producer that increases production, like Frontera Energy, Meg Energy, Bonterra. So those things are very cheap at a PE of 2, and they can increase production. And a reminder here, we are still at this point here, and that's the point where we have low capex. We are not investing a lot in commodities like energy. We are not investing in new oil production. Okay, so they are just the oil majors and refiners. They're just giving out dividends, and they are not drilling new wells. So that's the point where oil will start going up, and then these energy companies will make a lot of money, and they will start expanding their capex again. Okay, so this is chart of capex. Capex low, oil price goes up, and then they will start drilling again, and then it goes up. So I think we are now at that point where oil companies will just sit there, do nothing, wait for the oil price to go up much more, and then they will start moving more capex in. So this is a perfect place to invest in. We need to get into energy companies. So oil is going up, and based on this chart, you can see if oil goes up, then food will also go up, because this is the global price of food index. Food and energy always go up at the same pace. Okay, this chart gives us the evidence. And as you know, if oil goes up, then food goes up. So we need to have food stocks as well. And the best way to do that, and by the way, natural gas is also correlated. Natural gas is also skyrocketing right now. It's almost at $10 right now, and it's going much higher. So if you look at these charts, you know that food is going up. And if food goes up, we know that fertilizers will also go up. So food is correlated to fertilizers. We have a bit of a dip here. So fertilizers have dipped a bit, probably because these fertilizers have gone up too fast. So now they are coming down again. You can see that here. So fertilizers have topped out a bit. Now they come back to the ground and probably stay elevated here. But we know that food prices are going higher together with the oil prices. So I don't think that this sector is dead yet. So keep on investing in food, oil, energy, and fertilizers. Okay, and that is the end of this video. We are still in inflation. Gold is a buying opportunity, but energy is probably a better play here. And I'll see you in the next video.